time, welcome. If you're somebody who is a subscriber or who regularly watches, well, I think you're going to enjoy a special edition of 3 at 3, because not only will I be talking about unusual option activity, I'm going to describe some spreads I did in Gamestop and why I did them. So let's get started without any further ado. This is the 26th of January. I am Jon Najarian. This is 3 at 3. 3 at 3 every day. We bring you unusual option activity. You're going to get that today. You're also going to get that description I talked about as far as why I traded in GameStop put options today. The disclaimer is that this information is for educational and informational purposes only. What you're about to see is investment, in some cases investments that I've made, and it's not to be taken as a recommendation for something that you should do. You have to decide if it's appropriate for you. All investments involve risk. Intellectual property rights, yes. As you know, our heat seeker is an algorithm that we developed that finds unusual option activity, and that heat seeker is our intellectual property. So we have patents, trademarks, registered marks, copyrights on virtually everything you're about to see. That's the extent of the legal today, folks. Now, there we go. There's Bernie. He's popping up everywhere, right? I just can't resist. I've got so many of these. I just had to share it. Now, back to GameStop. Just a little bit anyway. GameStop, this was in December. And in December, on the 23rd of December, I talked about the unusual activity in GameStop options. We saw unusual call activity. As you see, the stock for much of 2020 was between $6 and call it $8. Then in October, it began a breakout, and December 23rd, it was up 12%, or $2.39. We talked about that unusual activity at that time on live television, and I was lucky enough to be able to be in on the calls as it took off to the upside. Now, let me just see. I got to get Pete's in first, and then I'll get to my GameStop trades today, because the first part of it was we were long from roughly 21-ish all the way up towards 60. And you might wonder, why would I change? I'm going to describe why. And as far as Pete, yesterday I cited this, the Virgin Galactic trade. That would be space, SPCE, the symbol. And Pete was talking about calls that expired January 29th. That is this Friday. So you always need to be aware when something's that short term that you have an option that is fast in time decay, which means, of course, V, volatility can hurt you bad, as well as T, theta, time decay can hurt you bad too. But neither of those hurt you. In fact, the stock ran from that 34.61. There you see us. We were buying the February, we noted the activity in the February 50 calls. And as I told you yesterday, I bought the at the monies, the 35 calls. Why? Just because I like having something closer to the money when I'm following unusual activity. There it is, trading up to 42.58. So nearly a full $8 jump out of the stock. And those options, my 35 calls, they worked out pretty well too. Pete also spoke about GoGo. This was February 20 calls, and GoGo moved up another 23 cents today to 14.50. When we were in here in GoGo, the stock was 13.40, I think, and today 14.73. So a nice move out of both of those two from yesterday. If you'd like to learn more about spreads like the kind I'm about to describe, you could go to marketrebellion.com/get started. That is marketrebellion.com/get started, because there you can learn about spreads for stocks, options, futures, cryptocurrencies. You can learn also about opening the wallets, being able to fund your accounts and all that for cryptocurrency, as well as the futures and doing futures, for instance, against your cryptocurrencies, whether you choose to do that on an exchange out there in the ether, decentralized finance, or whether you choose to do it over at the CME. Anyway, marketrebellion.com/get started. All right. So now, after we saw that huge run from December 23rd, where it popped from that $21 level all the way up to $60 a share. And as I say, I was out, but they dragged me back in. It's like Al Pacino. They dragged me back in. Why? Well, because of this, because we've got these billionaires fighting, and because we've got so many of the folks over at Wall Street Bets and Robin Hoodsters and all the rest piling in and fighting each other. Dramatic fashion, they're fighting each other here. So what I'm looking at, folks, is that GameStop short seller was down 30%. That would be Melvin of Melvin Capital. Down 30% this year, and he got a $2.8 billion bailout from Stevie Cohen, the gentleman you see on the screen there, the guy that owns the Mets now, as well as Ken Griffin. So those two billionaires lining up and funding a guy who's made a bad bet, but perhaps is getting squeezed in legendary fashion right now. So what I was noting was, as this squeeze was going on, I saw another billionaire, Chamath Palihapitiya. He was following these Reddit investors that I spoke of, you know, the Wall Street Bets guys. And just as I said in print yesterday, I mean no disrespect to any of you over on Reddit and those Wall Street Bets guys. In fact, I'm going to be speaking to Jamie, the founder of Wall Street Bets, on Thursday on my podcast. How about that? So what I'm talking about here, folks, is that a lot of the sorts of trades that people talk about, and in some cases back up by showing their trades on that Reddit thread, Wall Street Bets, the ones that I look at, a lot of them are YOLO trades. You only live once. I'm putting it all on black. I never put it all on black. I keep some over here and some over there, and I'm constantly moving money around. I don't like to swing for the fences. I swing for singles and doubles because I want batting average, especially at this stage in my life. I've done pretty well trading for 39 years. It'll be 40 years in September. And what I like to do is go at the highest potential returns that I can get for the lowest risk or exposure in the markets. And so that's what I do. Now, Chamath is a smart guy, worked over at Facebook with Mark Zuckerberg. Now he runs Social Capital. Nothing but respect for you, Chamath, but I think he's wrong. He's buying calls, out of the money calls, and he paid as much for these out of the money calls as I paid for the stock back in December. Now, does it mean Chamath's going to be wrong? No. Does it mean I'm going to be right? No. I'm just pointing out a fact that the price he paid for these calls was more than the stock was in December, okay? Now, that in and of itself is not enough to get me to make an investment. But as we ran from 21 to 50, 60 bucks, and then we saw that moonshot that carried it to 159, and then whoosh, back down into the 70s, I think. Yeah, 70s, just yesterday. I'm telling you, as most of you know, that's not normal. We've got an epic short squeeze going on here, and I wanted to put on a limited risk trade, and I wanted to have exposure to a potential move back down from whence it came. So what did I do? Well, let me show you. First, getting another fill here, just one sec. I trade throughout the day, as most of you know. And by the way, I'll be back on the halftime report tomorrow with my buddy Scott Wapner. All right, so here's one of the trades that I put on. That is a screenshot of the trades that I did. So you'll note that I bought GameStop 60 puts, paid $21 for those with the stock over 100. So in other words, $40 out of the money puts. I'm buying those. What did I sell against them? I sold those March 50 puts for $13. So those were more than $60 out of the money when I did that trade. So those March puts against my April puts. So first of all, I have time. I've moved it a little in my favor because I have more time for my April puts to be right. And I'm short puts in March at that 50 strike. As you see, paid about $216,000 for my longs, collected about $130,000 for that short position. Then I also went out here and sold a put spread, a spread that can only go to $10 because, as you see, the 40 puts are what is the strike price for these puts in April that I'm short, and collected $105,000 for those. Then I went out and covered those with the 30 strike puts for $6.35 and paid about $60,000 for that. So you put the whole mess together. Maybe I've tied up $100,000 or thereabouts for this trade. Now, what I'm looking for, folks, is if this fever breaks, doesn't mean the stock has to go all the way whoosh down, to 21 where it was in December. Doesn't mean it has to go down at all. But I think eventually the short sellers will be bought in. None of the positions you see on the screen here that I am doing are short the stock. So in other words, nobody can make me buy in short shares. All those people like potentially Melvin Capital and anybody else who's piled in on the short side, they could be forced to buy in. That is much of that squeeze that you hear me talking about here. So I think when that fever breaks, the stock comes back down, perhaps to 100, perhaps to 80, perhaps even to 50. Does it do it all in a day? Hey, it's crazy out there. It could happen all in a day. Does it bleed off over time? Because unlike when Carl Icahn was going against Ackman for his Herbalife bet, Ackman at first was unfortunate enough to be in the short stock position. And Carl Icahn went in and put on some call spreads and was able to profit mightily on the squeeze. But nonetheless, you don't get bought in if you have puts. If you have puts, that's a way of expressing a short view with a limited amount of risk. So in other words, I've got limited risk trade on here, and I'm not going to have to borrow shares from somebody who does not want to lend them to me or who wants to lend them to me at a very dear price. So that's why I've established this trade, folks. I think it makes a lot of sense. I'll keep talking about it as I adjust and so forth, but I wanted you guys to know that that's how I did it. Note that those are one-to-one spreads, that I have one April 60 put against one March 50 put. That's a one-to-one call vertical spread, and what I've put vertical rather. And what I've done is I've stretched it out in time because I'm long April, which has 30 days more to trade than those Marches. And guess what? March, it looks like earnings are after these March options expire. If that's indeed the case, I could end up having my long puts in April, depending where the stock is. Those March puts could expire worthless, and I'd still have another bite of the apple and be able to sell more puts into this against my long April puts. So that's the position I've established, folks. Full transparency, you see it there on your screen, and we'll talk about this as we move further down the line. There was GameStop when we established that position, about 115 a share. Presently, it's 147. So to all the YOLO players, I salute you. Congratulations. My spread's still out there. And again, this is something I think that plays out over time. Happy to hold it. Let's see how this whole thing works out. We've had several halts today, by the way, in the trading of GameStop. If you'd like to subscribe to our YouTube channel, we'd love to have you. you can go to YouTube and in the search bar, type in Market Rebellion. That's in the search bar on YouTube, type Market Rebellion. And every time that we have a new 3 at 3, you'll be able to see that pop up on the feed. You'll also see Pete's The Take pop up on your feed, and you'll see the podcast. Like I say, I've got Jamie, the founder of Wall Street Bets, is joining me Thursday this week. That's going to be huge. So we'll be talking about exactly what he did when he created that thread on Reddit and that sub-thread. I think you'll really enjoy the conversation. He's got a book out, and we'll be talking about all of that. And if you subscribe on YouTube, you'll know about it all the time. Just click that little bell up in the corner, and you'll be alerted every time there's fresh content there. All right, so now the part that the rest of you wanted is the unusual activity report for today, the 26th of January. Delta. Okay, so our algorithm picked up unusual option activity in Delta. The stock was $39.08. As you see, this was at 1:39 Eastern time today, so about an hour and 20 minutes before we did the show here. 5,700 of the Feb 40 calls bought for about 88 cents. So that's roughly, in rough terms, $500,000 trade. Bang, like that somebody slammed in there. I want to follow those kind of trades, folks. So for that reason, I did, except this is at the money, and it expires the 5th of February. I just want to emphasize that. These are the 5th of February, 40 strike calls. They're at the monies. That's what I bought. Stock's up a little. It's 39.35. And as you see, last week on Wednesday and Thursday, it was a little over 41.5. So somebody's betting it goes back to that area by the 5th, on or before the 5th of February. This is Voyager. It is a publicly traded crypto broker. It trades on the Venture Exchange up in Canada. It also trades over the counter here in America. They will pay you up to 9.5% interest for your Bitcoin on that site. They have 50 plus digital assets. I'm sure I'll have to change that one of these days because they keep adding them. Pretty soon it'll be over 60 digital assets. So it ain't just Bitcoin and Ethereum, folks. It's 48 plus others that are on that site, commission-free trading, and a lot of crypto made easy. It's right there on your iPhone. You can go to the App Store for it or over to Google Play. Let's hit Micron now, shall we? Well, Micron, MU, bullish call buying, stock's $80.60. Somebody steps up and buys the third week in February. Those are regular option expirations, 87 calls, 1,000 of them. So think about it, folks. This is about $1 million trade because every option is for 100 shares of stock. So 6,000 options means 600,000 shares of stock somebody could control in their hot little hands for $1.41, which is $141 because every option's for 100 shares of stock. So I did not buy those 87s. I bought a lower strike and sold a higher strike above it, 1-to-1, much like I showed you on those screenshots earlier. So that's a 1-to-1 bull call spread that I've established. Keep in mind that these options are options that expire in, give or take, 4 weeks. And that means there's very rapid time decay. So unless you're a YOLO trader, you want to be aware that you only have a short amount of time to be right in here. For that reason, keep an eye on Micron and try to mitigate risk as best you can. I did it by doing that 1-to-1 call spread, owning a strike towards that 80 and selling a higher strike against it. I'm gonna have to call you back, just finishing 3 at 3. Sorry about that. That was my broker friend calling me up just to see how we were doing. All right. This is the Micron trade, and there is Micron. $80.47. And as you see, again, last Wednesday, this stock was about $86 and some odd cents. So it's come down, and perhaps that's why somebody's willing to take a bet on this $90 billion monster, which is Micron, MU. I'm in here. I'm at the lower strike, have sold a higher strike against it. The ones they were buying were these 87s. That was our trigger. Third and final of our 3 at 3 is Tilray. Now, this one had an interesting performance after it came public because they brought so little of it public. There was a massive short squeeze that carried this stock to over 300. So for those people who were lucky enough to ride that one, God bless you. Tilray making another nice move because, of course, we've had legislation. We've had votes in the case of New Jersey where they voted to authorize recreational marijuana sales and so forth. That's good for many of these cannabis companies, of course, that have seen substantial rises since the election November 4th. So for that reason, we see people speculating right now at the 20 strike in Tilray for basically a 2-week out option. This week is the 29th of January. Next week will be the 5th of February. So roughly 2 weeks, call it a couple days less than that. They're buying 9,000 of these February 20 calls. Now, you could buy the lower strike, which is what I did, and sold that higher strike. What I like to do when I set that up, folks, is I like to spend about what the player did when they got into the trade in the first place. In other words, about $1.36. If that means I buy the 18 calls and sell the 20s 1-to-1, if I do that, I have no additional upside risk because for every option I own, I've sold an option, no upside risk. So in this case, I will probably be in this trade about a week, maybe a little longer, but we'll see if we get a fast move out of Tilray that we're able to profit from. Again, volatility, or V, and theta, time decay, T, are two things you need to be concerned about whenever you're in an option that's in its final 6 weeks of its life, because the acceleration is dramatic at that point. There is a look. It's moved to 19 from that 1873, which is good for me and anybody that followed us into the trade. It's up about 10.5% on the day. $3 billion stock. Bang! Now let's get to the questions, shall we? The questions flying at me at Jon Najarian or at 3@3_UOA. Let's get to those questions right now, shall we? Mitt, okay, Jonathan, and his handle is at JTovie, that's JAYTOVIE, says, 3@3, Jon Najarian, thoughts on Mitt? Does it have room to move to the upside? Yes, it does. We had unusual activity in Mitt again today. And this one is a mortgage company stock, folks. And it's, I think, if memory serves, $4 or thereabouts. Maybe it's a little over 4. And what I'll point out to you here is that when you're looking, you're still seeing numbers that look good. Now, the number that did not look good, of course, was the first quarter of last year because of that shutdown. But I think Mitt comes back. It's only $172 million, $180 million stock, something like that. I think this one could easily get gobbled up by a bank that wants that exposure to consumers and loans and so forth. So keep an eye on Mitt. I am in the trade as well. Facebook, FB. So, Jon Najarian, Pete Najarian, what's your strategy when a call has run into earnings and you've already trimmed half at 100% profit? First of all, well done, sir. Or, yeah, sir. And that is coming to us from at Bold Bias Finance. That's BOLDBIASFINANCE. All right. Remaining Facebook calls are up 180%. Think they deliver mañana? Yes, I do. I think Facebook delivers tomorrow. But you could, instead of selling out of the calls that you're long, sell an at the money. Why? Because volatility has spiked. It's higher into earnings than almost any other time unless you have a GameStop situation going on. So you can take advantage of that by holding the calls that you've got and selling an at-the-money call, which is what I would do. I can't counsel you what you should do. I can say what I would do is I would own those calls, even though they're up 180%, and I would sell an at-the-money call on Facebook against it. I'm probably collecting a nice big fat premium, might be even the same amount of money that I paid initially for that long position, and then I can just sleep a little more soundly into the earnings. Mañana. Bang. All right, let's get to Ross's question now. Ross, and his handle is at 333LRB. That's 3 3s and LRB. Jon Najarian, 3@3_UOA. When you sell a call above the call that you bought, how many strikes higher do you normally go and what time frame? When you ladder 3 or 4 expiration dates out in time, do you use the same strikes or go higher with each one? I'm brand new to Market Rebels, up 98% so far. Bang. Nicely done, Ross. So what I do is, as I said, when that, whether it was Micron or whichever it was, when I see something that's basically $1.36, maybe that was Tilray. When I see something that's $1.36 at the 20 strike, I want to buy, for instance, the 18s or something at the money and sell the 20s and perhaps have $1.30 on the table for that spread. Now, one of my rules, Ross, is that I like to see more than a 1-to-1 potential gain on any trade that I put on. So would I pay $1.36 for the 18-20 spread? No, because that would mean that I could only make, 64 cents, because the difference between the strikes is $2, 18 and 20. And if I pay $1.36 for something that can only go to $2, I could only make 64 cents. I don't like that trade, but I like buying the 18s or 19s, selling the 21s or 22s against it. So that's what I would do. Time frame, same time frame as the call that I'm long. That's what I do, Ross. In the example that I gave you guys earlier, where I have a put spread, I had a specific purpose for that in GameStop because the earnings are after the option expires, the March option. So I thought perhaps I could take advantage of that. We'll see how that plays out. As far as laddering, this is where, just like when we're trading bonds and things like that, folks, or being long bonds, and you ladder into a position. If I have Apple, for instance, into earnings, I'm already short the 1 week out options. I'm short the 2 week out options. I'm short the 3 week out options, and I'm short the 4 week out options. So if I have 10,000 shares of Apple, I'm basically doing 25 of each of those, which represents that 100, which would be 10,000 share equivalent in options. So what I'm looking to do is each week, as I buy back the expiring 1 week out option, I roll it out to the 4th week and so forth. So they're not all at the same strike, because I'm constantly rolling that covered right, which is what we call that. And I'm constantly collecting premium each and every time I do that. So that's what I like to do, Ross. And again, thank you for your faith in us and for putting on some nice trades, it sounds like. If you'd like to learn more about Market Rebellion and what we do, teaching people how to trade stocks, options, futures, cryptocurrencies, then I'd say head on over to marketrebellion.com. And if you go to marketrebellion.com/UOA, you'll see a lot of the unusual option activity that I was describing today, because that's what we produce there throughout the day. 20, 30 trades a day, every day that the markets are open. Yeah, that's what we do. And we vet them before we just post them up. This isn't just, stripping something off of our algorithm and posting up every single thing. Nope. We really refine them down before we push them out and post them up. And we give you guys the first crack at it too. So check it out. Thank you for joining me today. I hope you enjoyed today's version of 3 at 3, and I'll see you tomorrow, both here and on the halftime report. Bang.